I'm going to kick off the meeting because we got a lot of things to get done tonight. It's 5:30 and we have quorum. So just going to open the special council meeting for Thursday, May 11th at 5:30. And before I start, we're grateful to work, live and play on the traditional land of the Lekwungen speaking people of the Esquimalt and Songhees nations, whose stewardship of the land continues to this day. And just for the agenda tonight, I am going to ask for a motion to amend the agenda to add bylaws, and that's specifically the tax rate bylaw 1980-01-2023, first, second, and third reading. There was a technical error that we had. I think everyone has seen the appendix. So can I get a motion? Oh, okay, thank you very much. That's Councillor Grove, seconder.
I'm not sure that we're adding bylaws.
Yeah, it's a bylaw. Yeah, we've already read it first, second, and third, but there was a technical error in it. Okay, Councillor Jordan said, okay. And all in favor? That's unanimous, motion carried. Public participation, no one has called in for electronically, and we have such a crowd here tonight. No public participation, I guess. So we'll get into new business right away. And are you going to introduce the auditor, Jen?
Certainly happy to do so. So we have Cory Vanderhorst joining us tonight. He is a partner with MNP. MNP is engaged to perform our financial statement audits. And so with that, I will turn it over to you, Cory, to present the auditor's report. Thank you.
Thank you, Jen, and thank you, Mr. Mayor. Hello to the Mayor and Council. Thank you for inviting me here tonight. I do have a quick presentation. Just get the slides going up on the screen. First, I do want to thank you for squishing me in and into some of your other agenda. I really appreciate that. I have a short presentation, but I do want to start with a big thank you to Jen and the finance team and staff throughout the city working with us on the audit this year. We really appreciate it. There was extra work for them and for us with an audit standard change, and they really did some of that heavy lifting, and I really appreciate your cooperation on the audit process. So I'm just going to take you through a couple audit highlights and reminders on the audit process. When we're doing our audits, we're looking at the controls in place at the city to make sure you're getting accurate financial reporting. We're sampling transactions throughout the year. We're not looking at every transaction that the city undertakes. To do our audit, we use this number of materiality, that's $1.6 million. That we look at every transaction over that balance. So large capital grants, capital projects, donated developer contributions can be over that amount. And then underneath that $1.6 million amount, we are sampling to get ourselves comfort that the financial statements are accurate. For our engagement status, we didn't find anything unusual, any irregularities, no evidence of conflict of interest or illegal transactions. We're not specifically looking for fraud. We're not performing a forensic investigation when we do a audit of financial statements. But if something came to our attention in the first audit, I would be required to report it back to council. Again, another thank you for the cooperation and assistance from management staff. Our audit is basically complete. The last step here being council approval of the financial statements. And we are waiting for the West Shore Parks and Recreation Society to approve their statements as well, which form a part of your statements. But we expect that approval to take place very soon. I'll confirm that MNP as an audit firm is independent of the city. We didn't do any other projects or work from January 1st, 2022 through to today that would impair my ability to give you an independent audit opinion. So thank you for, I did promise to be 5 slides. I'm happy to answer any questions from council.
Thank you very much, Cory. Any questions from council? I just have one quick question, Cory. The materiality number, is that just a percentage of our overall expense? Is that how that's calculated?
Thank you, Mr. Mayor. A percentage of revenue, actually.
Revenue,
roughly 4%.
4%? Yeah, okay. Thank you very much. And that's pretty well standard right across the municipalities. Is that how that works?
Yeah, absolutely. Every audit firm is going to be a little bit different in the range. We tend to use 2 to 4% for municipal audits. Right, every auditor is going to be a little bit different in the ranges that they apply. We use 2 to 4%, and we're comfortable with the controls at the city and the accounting that we've for the last few years where we've been working with the city. So we're happy with the higher end of that range.
Thank you very much. Thank you very much for the audit too. Really appreciate that too. It's a great segue into a 4.2. There's no motion, that this is just for information anyways, right? So over to you, Jen. Thank you very much.
Thank you very much, Your Worship. I have 2 or 3 slides that simply highlight our financial changes since last year. And so I'll just start with a brief commentary. Amanda, if you don't mind just moving to the next slide, please. So on our financial position, and so this is statement A of the financial statements, the first page. And I'll preface this by saying, in my opinion, with local governments, it's important to really understand the changes in your financial position. I've said it in previous years, whether or not you move from a net asset to a net debt position, meaning that your liabilities exceed your assets, it's not necessarily indicative of favorable results. It's just important to understand what is the composition of this information and why the change. So big picture for the city of Colwood, the majority of our change is related to our continued investment in infrastructure. In particular, in 2022, we continued road infrastructure works. So when we look at our financial assets, we're seeing a decrease in our financial asset balance year over year. Primary driver for that is we are drawing down on our cash reserves to fund some of these major road infrastructure works that were approved under the last 2 financial plans. Similarly, our financial liabilities, and you can refer to notes 8 through 10 to better understand the detail of those. But about 25% of that balance is funding that the city utilizes. So it's deferred development cost charges, primarily road DCCs that we utilize to fund, again, that infrastructure work. So the primary reason that our financial liabilities decreased over last year is we were utilizing those road DCCs, both in the Allendale district and as well at the Latoria VMP intersection. Note 12 provides detail on the change in our tangible capital assets. Overall, a net increase of just under $20 million. About half of this is related to infrastructure, again, primarily road infrastructure that we inherit through the development process. And the other half, again, the work that the city is undertaking directly. Non-financial assets, that change for us, simply an increase in our prepaid expenses over last year. Note 13, if I had a favorite note of the financial statements, the breakdown of our surplus I find is particularly helpful. It understands our various funding sources as well as the change in our operations. And so with that, Amanda, if you don't mind flipping to the next slide. It's important to consider when we look at our revenue, the primary driver, especially in Colwood, where we're a growing community, we continue to develop each year. When we look at that variance between our budgeted revenues and our actuals coming in. So this year we actualized at about 46.5 million. Our budget was 40.9 million. The primary driver for that is that inherited infrastructure. So public sector accounting standards require that we recognize a revenue associated with that contributed infrastructure. From a budget perspective, our budget is all about our authorization to spend. And so we don't factor in a budget for our anticipated infrastructure that we inherit through development. 2022, the majority of that inherited infrastructure was related to the Royal Bay development and also to Olympic View. The breakdown of our revenues, about 50% of it is property taxation, quite predictable in nature. As you know, we have quite a detailed budget process. So that tends to actualize right on budget. If you recall, in 2022, we did receive confirmation that we would not need to repay a federal PILT that we had previously allowed for. And I'll get to it in a moment. About 50% of the operating surplus that we generated this year was a result of that federal PILT. And so we were able to recognize that revenue, and it is sitting in our general accumulated surplus as a funding source. When we look at our total expenses, budget of approximately $30 million, we actualized at $28.5 million. The primary reason we came in under budget, we had about a $2 million special initiative budget, and a lot of those initiatives are underway ongoing, and so they got deferred into 2023. When we strip that activity out and we strip the amortization out, we were looking at our operating expenses coming in approximately $400,000 under budget. And about half of that amount was related to our RCMP contract. And so the takeaway there, when we look at the city's operating expenses, we actualized at about 99% of our budget. And with that, if we could just move to the last slide there, or you can have a look at note 13 in the financial statements. Understanding the change in our accumulated surplus. And I want to speak just for a brief moment about the change in both our reserve balance, but also our operating surplus balance. And the financial statement note provides much more detail than is before you on the screen. In recent years, we have been utilizing our operating surplus as a funding source, primarily for infrastructure works. And so on the face, it appears as though we drove a deficit this year. We did not. We utilized about $3 million of our surplus to fund primarily road infrastructure works. And so when we account for that, we did generate an operating surplus in 2022, split between both that PILT revenue that I mentioned and then coming in under budget on our operating expenses. Reserves overall, a net increase of $1 million. But again, it's important to note that we have ins and outs that we plan for as part of our financial planning process. We spent $3.5 million under our financial plan, and we did transfer into reserves $4.5 million. All of our tax and investment funded reserves that we planned for, we did actualize those reserves. The only reserve transfer where we did come in under budget was that related to community amenity, and that was simply primarily related to development just not actualizing at the pace that the 22 financial plan had anticipated. I'm pleased to answer any questions that you may have.
Okay, I'll open the floor. Councillor Day.
Thank you. I just had a question. I'm looking at the note 13 and the West Shore Parks and Recreation Society amount of $390,150 is noted there as part of our reserve funds, which I believe relates to our planning for future expense for West Shore Parks and Rec. But there's also the West Shore Parks and Rec surplus of $483,750. So just wanted to make sure my understanding of those is correct.
Thank you, through your worship. Your understanding is correct. So the $390,000 that you referenced, our cash, we have control over, and you're correct. So in recent years, we have been transferring into that reserve any difference between the budget that we had maintained for their requisition and where the requisition actualized. You may recall there was a series of years where the requisition amount was frozen. We continued to tax an increase, and that amount was transferred into reserves. And our expectation is that will form some funding for future infrastructure requirements on behalf of West Shore Parks and Rec. The 483,000, not within our control, not the city's cash, but it is our proportionate consolidation of their operating surplus.
Okay, so with the funds that we've set aside for the West Shore Parks and Recreation future requisitions, we are not restricted. So for example, when we're talking later on at our next meeting tonight, that is funding we could consider towards creating a new center, say maybe in Royal Bay for recreation. Is that correct, or are they restricted?
Through your worship, fantastic question. So the direct answer is no, they are not restricted. We do not have a bylaw establishing the specific purpose for that funding that's set aside. We do have scheduled to return to this council this spring a proposed consolidation overhaul, basically a backgrounder on all of our reserves, both those that are statutory, so per legislation, per city bylaw, as well as those that have been set aside for specific purposes, past council resolutions or otherwise. So we'll be bringing forward all of that background this spring, and it will be an opportunity for this council to reconfirm the purposes of the funding. But today, the West Shore Parks and Recreation funding that's been set aside has not been restricted specifically for example, infrastructure purposes.
And are we aware of any future big ticket items for West Shore Parks and Rec that may be arriving on our table in the next year or two?
Through your worship, I would want to refer back to their budget documentation. I can't recall off the top
Sure.
of my
No
mind.
problem.
West Shore Parks and Rec Society has been quite candid, similar to our position. They are underfunded in terms of what is being set aside for future infrastructure needs. But I would need to return with specifics on what we are anticipating in the upcoming years.
Perfect. And just my last question, I didn't notice it anywhere, but that could be because I've had an exceptionally busy week. But I'm just curious what has been happening with the casino funding and whether or not we still have any policy with regard to those funds.
Great question, through your worship. So we do budget for the casino funding. In recent years, we have shifted our budget so that that funding is directly contributing to our reserve funds. In other words, we don't rely on it for operational purposes. The funds that come in are transferred and fund our reserves. But again, we do not have a specific policy that directs how that funding is to be utilized. We are required annually to report out on how we are utilizing the funding, but we do not currently have a policy on how we are to.
Great, thank you.
Thanks a lot. So Councillor Jordison, go ahead.
Sorry for this question. It may be very obvious. I'm just not sure. I just wanted to ask about the affordable housing reserve. What typically causes a transfer of money out of that? Like, what would that look like?
Through your worship, another great question. So we currently do not have a policy. Well, let me preface this by saying, so in recent years, it's been a council resolution that has specifically directed utilizations of that fund. Off the top of my mind, I believe there's been 3 affordable housing projects where we have utilized that funding. Ultimately, it's been applicant before council. Council has resolved and we have utilized that fund. There has been some conversation about a framework that would be helpful to consider so that when those requests do come forward, we have something to help guide decision making. But in recent years, we have not. So it has been ultimately reactive as applications have come forth.
Okay, thank you.
Just my last question. It's a tough one to actually answer. I didn't expect a quick answer on this one, but what I'm talking about is operating surpluses right now. How do we know we're doing a good job here? like, what is too much of, what is too much of a surplus and what is not enough? I can never understand this, to tell you the truth, because it's all taxpayer dollars, right? And so are we over budgeting sometimes, or what's, I'm not too sure. And that's one thing I couldn't figure out by looking at the numbers.
I appreciate that question. The majority of the funding that drives our surplus is taxpayer, but it's not completely. We do have to recognize about 10% of our operations come through user fees. As well, we've got between 1% and 4% investment earnings, but yes, the majority is taxpayer dollars. It's really important that we understand, city staff, and when we articulate at quarterly updates, what is driving a surplus or a deficit. Because we do want to ensure that overall that we're not overtaxing this community. We want to ensure that when we get before council during budget deliberations, we are as closely as possible aligning the resource needs with our service delivery. And we attempt to react where we see misalignment, specifically, and I've mentioned this previously, the RCMP contract, that's a major expenditure for this city. We monitor that contract quite closely. As you know, at our population levels, we're responsible for 90% of that contract. In recent years, we've reduced what we tax. We only tax at 85% because we know historically what actualizes under that contract has come in under the budget consistently. And so that's, one action that we've taken so that we are minimizing what otherwise would be an overtax. But I don't think there is a clean, direct answer there. I think it's important that we're timely with our financial updates and that we can clearly explain what is driving whether what appears to be a deficit or a surplus. One topic during this recent budget deliberations, as we were internally preparing our operating budgets, is to understand the implication of staffing turnovers, retirements, for example, and trying to account for what inevitably is a timing lag. That can be offset by, sometimes during those timing lags, we're utilizing that funding to engage a consultant or a contractor, for example, to ensure that our service delivery isn't interrupted. I think it's about being timely with our results and about really understanding at that moment in time what is driving the variances from our budget. And so we can try and respond in the future.
Oh, fair enough. It's a tough question to ask, actually, sorry. Not seeing any other questions. I will ask for someone to make the motion of the recommendation, please. Okay. Councillor Jordison and seconder Councillor Day. Discussion. See no discussion. All in favor? That's unanimous. Motion approved. Okay, thank you very much. We'll go on to bylaws. Tax rate bylaw 1980-01, Schedule A 2023. First and second, third reading. So as I said before, it was a technical error that we had on it. Schedule A has been reissued and circulated to council. It's pretty clear what happened there. And so can I get a motion for first, second, third? Okay, Councillor Grove, seconder. Councillor Ward, all in favor? Unanimous and motion carried. And call for adjournment. Councillor Ward, Councillor Grove. Thank you very much. All in favor? Yes, and we are finished. We want to start early, Robert?